How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 3 to the Asian Session Library. As we can see, on this fine Sunday, going into Monday, we were able to find the Asian Session model successful once again with the same pair UJ. So we're going to walk you through the steps as always. So step 1, we're going to wait for one side of the New York lunch to break. And the New York lunch is normally between 12 p.m. to 8 p.m. Now, if you watch the Asian Session model that I originally made it, I had it at 10 a.m. But I don't like the overlap with London close. London close is 10 a.m. to 12 p.m. So I pushed back the New York dead zone just to 12 p.m. to 8 p.m. New York Eastern Standard Time. After I see one side of liquidity broken, I'm going to go on a lower time frame to find a fair value gap. I'm mainly going down to the 1 minute and taking the first 1 minute fair value gap that's very obvious to me to go long. Now, that doesn't mean you can't take a 2 minute, a 3 minute, 4 minute, or 5 minute fair value gap. I personally, Deontay, I'm taking a 1 minute fair value gap to find my entry. After that, I wait for price to hit the fair value gap and I hold. And that's simply all the model is. There's no bias in charge with it. There are times where it does follow the daily trend. We could see UJ has been trending higher, making higher swing highs and higher swing lows on the daily time frame, which is another bonus with the model, honestly. But overall, it's just getting 20 pips, 30 pips, 40 pips, and see you later. You're in and you're out. That's all this model is. I'm taking Fridays, 12 p.m., and then I'm going all the way to Sundays, 8 p.m., so I can make a full New York dead zone. After that, I mark off the 15-minute swing highs and swing lows. So we'll bring it back to beginning right here. So that's that low right before going into 8 p.m., so I mark it off. Have a 15-minute swing high here, a 15-minute swing high here, and then the highest high that the session was providing here as well. Now, it doesn't have to be a swing high, but if it's the highest high and the lowest low of the session, I'm marking it off. It's significant. After that, I wait for one side to be broken. So when one side is broken, then I'm going to be on alert. You can see here, 8 p.m., it comes down. So it drops below the 8 p.m. opening price. So we're just going to mark off the 8 p.m. opening price because this is significant as well. There's a confluence here, and there's an analogy that follows suit almost every single session, especially if it's trending up or trending down. You'll see the sponsorship. This is Asian Open. This is 8 p.m. And we're going to leave it in, we'll leave it in black. So that's 8 p.m. opening price. At this point, I would have set an alert, which I did. It went off. Then it told me scale down. So I would go down to the 1 minute time frame. And I'll wait for the first fair value gap to form. Now, I already have it highlighted here. You're going to see it come up. But there was one here, real small. This may not have been as obvious to many people, but that is another one there. Because a lot of people may point it out. Oh, there was one here. There was one here as well. The one that I was looking at was that one that forms after the BPR. So we basically get a fair value gap down and a fair value gap up. BPR, balanced price range. That's the fair value gap that I'm looking for right here to trade into. I'm going long into that. Now, how do I go long? I just wait for price to hit it. So price comes down into it. This is going to be the entry point. And then at this point, then I would scale down. I would say, all right, how much risk am I going to take? Normally, I'm going to set it to 15 pips or 20 pips. So that's 15 here. This would be the SO. That's a 15 pip SO. And then TP is normally going to be more or greater than my stop loss. If not, you could be looking for a 1-to-1. So you risk 15 to gain 15, $1 for $1. But generally, I'm looking for more than that. So here, I'll be looking for 20 pips. And you'll see here as well how it lines up right above that first 15-minute swing high too. So that's a good scenario as well that I'm looking at. Price can most likely target this as buy side. So we got a 20 pip TP. It's simply what I'm looking for. That's the minimum, really. Very minimalistic would be 15 pips or 10, but 20 is ideal, I think. in my opinion at least, doing and watching this strategy over and over again, I think that's the very ideal amount of pips that everyone should be aiming for. So then I wait for price to come back down. Hits it. So I'm long now at this point. So that's my entry. And then you can see, yes, I'm below the entry point. So this drawdown. There's going to be times where you're going to be in drawdown. But the sign is I want to be in more profit than I am drawdown. And as you can see, price shoots up very quickly. And where's the opening price for the Asian session? Here, right there. That's 8 p.m. Look how price drops below the opening price. And why does it do that? It does that because it's a cheaper opportunity for the algorithm or the commercial speculators to find a buy. Anything below is going to be a discount. And a discount is what? Oversold. So this is an oversold condition. And you're most likely going to have ideal buy scenarios below the opening price for the session. Anything above most likely is going to be overbought or a premium. And I'll just leave it cheap here. And you can see how price dynamically runs back above the oversold condition, above the opening price, and back into a premium. And I'll speed it up. Comes back down once more again. But where does it come down? Below 8 p.m. opening price to find another sponsorship. Where does it trade into as well? Another very obvious fair value gap here. This large one here. Because we could see there is a shift going on here. It runs through this swing high. And you have the fair value gap from here to here. So that's another one that you could potentially be looking at here. But normally, like I said, I'm looking for the very first one that I can see that's very apparent and obvious to me. It was that one. You had another opportunity here, the pyramid or stack. And you'll see price gives you 20 pips. This is exactly like the last two episodes that I shared with you guys. There's nothing different. Now, I'm only using the yen cross pairs for this model. Many people ask me, why aren't you using AU or GU or any of the majors? Because typically during this time of day, there's not enough volume behind that. Certain entities aren't in the marketplace. There's not enough volume behind the price action. Here, the Asian session, yen cross pairs are most likely more exciting. Anything that's crossed with the dollar, not as exciting during the Asian session. That doesn't mean there are not times where the Asian session trends for the majors like AU, GU, NU, EU, and etc. But I favor the yen crosses because it's more of a volatile session for these pairs. You can see you get 20 pips and it hits the first level of that 15-minute swing high. So if you bring it back to the 15-minute time frame, you'll see now we went simply from sell side to buy side. That's all I'm doing here. I'm not overcomplicating the situation of what I'm reading in price action. I'm just going from one area of liquidity to the next. It takes out the swing low or the low, and then it runs higher, taking out the 15-minute swing high. You have this as relatively equal highs and this as well. Odds are it could continue running up there, and we do see that. So if you go back down on the 1 minute, just to see it, check it out one more time, and we'll just slow it down a bit. You'll see over time, it continues to do what? Follow price action structure to the upside and respect discount PD arrays. You'll see fair value gaps are being respected. Breakers and mitigations are being respected. You can see a very obvious one here. You have a fair value gap here. Here to here. That's the fair value gap. Look how it trades in there. Bodies are respecting it as well. Good sign. And it leaves it. And hits the last 15-minute swing high as well that we marked off in the dead zone. And the dead zone is normally going to give you consolidation. I don't like trading in this time period. There's no reason to be trading in this time period. Certain entities and certain people are not trading here. Yes, the algorithm may be pumping in orders all throughout the day, but there are specific times of day, and there are certain days at least too, that the market is most likely going to give you more dynamic response. This you're not permitted to trade. This, you're permitted to trade. I challenge anybody to find trade setups here and be profitable. It's going to be a very hard time. You're going to struggle trying to find profit because odds are you're going to be met with consolidation. Now, why do I say that? Simply, if you look at this session indicator, I know people keep asking me what session indicator is it? It's right there, FXN Asian Session Range by Rob Minty. Look at all the red shaded areas. That's simply the New York dead zone. Most of the time, it's consolidation. It's carnage. It's back and forth price action. Look at this. Here, back and forth. Back and forth. Very tiny back and forth, back and forth. And you'll notice here, it's a quick and easy way to backtest this too. If you set up the session indicator properly, you can see, look at this example here on Monday. Look how it comes down, runs up. And that was one of the examples I showed earlier on one of the episodes, I believe. Price comes down, takes out what? The clean lows or the 15-minute swing lows going into Asian. Then what does it do? Run back up to the buy side here. This model is very simple. You can teach this to a child. You can teach this to your siblings. You can teach this to an elderly person. They don't even have to know anything about Forex technically. You just follow those 3 steps. You find the swing highs, you wait for one side to be broken, go in a lower time frame, find a fair value gap, enter. And that's how I'm able to backtest this really quickly. I can just skim through, look to see, okay, this day was more profitable, that day wasn't as profitable. But like I said, consolidation. We're not trading these red periods at all. You're not permitted to trade. Yes, there are going to be days like this. But I'd rather skip out on that just to try and catch something once in a blue moon like this. There's no reason for that. Because majority of the times when you flip the coin, it's something like this, or this, or this, or this, or this. So I don't need to force a setup where I know the market makers are not instilling sponsorship. I know when it comes to the Asian session, they're sponsoring buys. They're sponsoring sells. And that's what you see here. Price continue to travel up. And you also see sometimes it gives you more than 20 pips. Yes, it does. And it even continues trending to the next day sometimes. And you see now it's coming to midnight. Now we're going into basically London open soon. And you'll see how it continues to run higher. So from this here, you would have been able to catch more than 20 pips. Not saying it's going to happen every single time this perfectly, but you will be able to catch a substantial amount of pips to make you say, this was enough for the day, I'm done trading, let's come back tomorrow and find the setup again. Does this mean every single week you're going to find back-to-back days where the Asian session model is hitting? No, because there are times when I backtested it. If you go back to the original post of the Asian session model, I have a link to a Google Sheets, and it shows me tracking the Asian session model for, I think it's AJ, for I think 3 months and a half. And you'll see there are some days where back-to-back I take losers, and there's back-to-back I take winners. And there's shrieks. And there's certain days you'll see, Tuesdays or Thursdays, they're running for more than 60 pips, 80 pips, 100 pips sometimes. And just off of this entry here, that's where we are currently in price. So hypothetically, just to see where we would be, let's say this is about where the entry is. A calm, nice 80 pips. Now, some people may say, oh, that may not be realistic because you have a trailing stop. You might get stopped out. That is true. That is very true. But at least you're able to take partials, you break even, you move stop loss into profit, and you take a winner and you go home. What more could you ask for? Hopefully this was insightful. Peace.